Hello, it's me again, Adam Gower. Thanks so much for joining me. Today I'm going to be talking to you about opportunity zones. All right, so in the Tax Cuts and Jobs Act of 2017, it was a partisan bill, but there was a bipartisan component of that, and that component was opportunity zones. And the idea of opportunity zones is to create incentives for investors to invest in economically distressed areas around the country. And the way that those incentives are built is to create the opportunity to defer or completely avoid capital gains tax, no matter where those capital gains taxes come from, if you invest in an opportunity zone. And the kind of capital gains that can apply are both short and long term, as well as from sale of stocks, real estate, or even art. It's really incredible. So be sure to go to leadersofthecrowd.com/small change for a tour of some of the crowdfunding websites, as well as to download a list of every single crowdfunding website that there is where you can invest in real estate here in America. All right, so now let's take a look at the Small Change website. We'll go to all projects over here. And if we scan down to Galaski Labs, right? Galaski Labs. And what you see here with the Galaski Labs opportunity is an opportunity zone fund, okay? And the way that the law works is that in order to benefit from the tax breaks, you have to invest actually in a qualified opportunity zone fund that itself invests in either businesses or real estate in a designated opportunity zone. And it is a progressive reduction in capital gains, which means that you don't get the benefits on day one. You have to stay the course, and that means a reduction after 5 years, all the way down to potentially a reduction to zero capital gains after 10 years. Now, there are two things to watch for. One is the rules are not 100% clear. So be sure to ask the sponsor to explain exactly how the rules are evolving and how they understand the rules apply to you directly, as well as always ask an accountant. Right? You got to pay your own accountant and ask them for advice specifically about your circumstances. And secondly, most important, the key to a successful real estate investment is not the tax breaks. The key is the project itself. So be sure to drill down into the details of the project. Make sure that it is viable in and of itself, and then think about the tax breaks, okay? Be sure to go to leadersofthecrowd.com/small change for a tour of websites, a free download of every website in the country. I'll see you in the next video. Thanks so much for joining me in this one. See you soon.